Kitco Mining's special coverage of the Precious Metals Summit in Zurich is brought to you by Wiesla Copper.
Would his electrician now be driving a BYD? This is Paul Harris with Kitco Mining at the Precious Metals Summit in Zurich, Switzerland. Joining me this morning is Gianni Kovacevic, author of My Electrician Drives a Porsche and founder of LithiumBank. Gianni, welcome to Kitco.
Great to see you, Paul, here in Zurich. And last time I saw you was in Colombia when I did a keynote for a conference once upon a time.
That's right, that's pre-COVID days. And as you've mentioned, we've known each other a good few years now. I want to go back a little bit before then, though. You published My Electrician Drives a Porsche in 2016. And that was part of the narrative about the energy transition and metals such as copper. And that was particularly relevant at the time when you were CEO of Copperbank. Now we're a good few years later on. How has Johnny, or how would Johnny, who is one of the protagonists in the book, how has their message about electrification aged?
Well, what has occurred in the world in 7 or 8 years? And I would think that the magnificence of what is electrification is becoming more and more a page one story. You know, in the background, the macroeconomics, recession, hard landing, inflation, interest rates going higher. Joe Q Public is feeling it. They're hurting. But people that watch your program and the people here at this Zurich conference, they're not investors, Paul. They're speculators. And at times like this, you look at the DNA of any company, of any commodity. Is it closer to the bottom or is it closer to the top? And of course, where are we going to be in the future? That's what the speculation has to be. And I will submit to people that this trend, this undeniable growth trend towards electrification, namely in transportation, those things, those inputs that make it possible are going to continue. Demand will grow from the bottom left of your screen. It'll continue to go to the upper right of your screen. This is a trend you want to continue following it, and you want to follow it for the next 15, 20 years.
Well, as you point out, Gianni, it's certainly making its way onto the front page, and some of the things that are helping it there, investment is starting to flood into the battery production facilities in the US, Canada, and elsewhere, the Western world. That must be gratifying to see governments finally start to respond to this challenge.
Well, you have to imagine this is millimetrical progress that takes place. I'm talking about the advancement and the take-up of batteries and how batteries are becoming more technologically advanced. They are producing more of them. There are thousands and tens of thousands of people, really smart people with big companies, some of the biggest corporations in the world, that are moving this forward. So the demand will be there. They should not lose too much sleep that the demand of lithium is going to continue to grow and all those things that make it possible. So it's logical. If you're a government that has a large automotive manufacturing industry or a large technology companies, you need to embrace that. And they are giving really pretty incredible governmental grants and tax breaks and incentives to do this. Talking about Europe, I'm talking about the United States, even in Canada. And this is something that you don't notice on a day-to-day basis, particularly with the overall macro markets, which are a little bit nervous. But that's not the speculation. The time continues to be to speculate in those very important building blocks and knowing how the chemistry will change on certain batteries in the future, but there's certain things that are not going to change. The interconnectivity is going to be copper. Lithium is going to be an important component in the chemistry of those future batteries, the ones we make today, and more importantly, the future technologies and chemistries in the future batteries.
Well, let's talk more about some of the metals that are going to go into those batteries. The demand may be there, but one of the big questions is, where are the minerals and metals going to come from? Are there going to be enough?
Where has lithium traditionally come from? People would be very familiar with the pictures of those salars in South America. We're talking about Chile, we're talking about Argentina, but that's a time process, 12 to 18 months evaporation. And the future projects are going to be less and less so the new production coming from there, because there just isn't the will to permit these things. And even geologically, maybe it's going to be more scarce. The future is going to come from hard rock mining and from DLE, direct lithium extraction. And that is, I think, where people need to focus, because with simply relying, and I've already mentioned that I don't believe we have enough production is going to come from salars, so it's either going to have to come from hard rock mining, or there's going to have to be a new way. And that new way is DLE, coming from brines in reservoirs. Because even with significant growth in hard rock mining, we've seen that now, a little bit of production come online, that doesn't solve the puzzle. That doesn't solve this problem, the demand problem that's needed for the next 20 years. We simply are not going to be able to build enough hard rock mines. Permitting's still an issue. The technological advancement's still an issue, which is why so many thousands of people are working at that chemical process towards DLE.
Okay, well, with DLE, it may produce a cleaner product than traditional production mechanisms, but you still need a mineral source, whether that's brine, whether that's clay, whether that's hard rock. How does DLE fit into the equation?
You have to picture yourself as the CEO of a large energy company or a large technology company. One thing, they want to be in a secure jurisdiction. They ultimately want a project that's going to be a 40 or 50 year sort of reliable source, no different than a large oil and gas company. They don't want to have a bunch of little operations and scattered all over the world. They want these big mega projects. And I would submit to people that Alberta, which is one of these areas that has these large reservoirs, is a jurisdiction that would be on the top of their wish list. Has a pretty good tax regime, has a workforce that's already been doing these extractive industries for decades. There's a very large data set. LithiumBank has now partnered with Schlumberger, the world's largest oil services company. And they're going to be moving forward our Park Place project by doing the first resource estimate for Park Place and helping us in getting the first economic model, what we call a PEA, preliminary economic assessment. That's pretty important. That's a pretty good indication. Now, what's in it for Schlumberger? This is a company that works on the largest projects in the world, and it would seem that as they grow this division for new energies, or I'm not quite sure exactly how they call it, they've come together with LithiumBank to work forward a large lithium project. And that's something that would tie into where these the CEOs of big energy companies and big technology companies, I don't believe that they're going to want to be working on areas that have a huge footprint, that have a really long permitting timeline. In a place like Alberta, they understand this type of business, and I think both from the federal level, as you've already mentioned, and from the provincial level, they're very much supporting this type of industry, and that's a good meeting to have when all these stakeholders get together. What will this look like in the future? So I think that's one of the benefits that we have, and certainly the way we are speculating, me, my partners, and the core investors that started LithiumBank, we IPO'd 18 months ago, is that's where the puck is going to be moving. And every time there's progress with the other companies doing this type of technology or extraction or DLE, we get collateral benefit from that, Paul. And so we'll see, and we follow we have a very small peer group, but we follow them very carefully, and I think investors and speculators should be doing the same. So,
well, tell us a little bit more about your specific DLE, or direct lithium extraction technology. What does it seek to do? Where are you in the process of developing that?
So people that are, I'll answer this question so that people that are new to this and people that have followed it for a long time can sort of appreciate where we're going. The early movers were trying to adopt their own technology, because what you're trying to do there is take what is a lower grade lithium in a brine, lift it, increase the grade 20, 30, 40x, and then it goes through a second process to give you what will be a product for a lithium-ion battery in the future. And they spent a lot of money and a lot of time, the other companies, and they are having tremendous success. We did it a little bit differently. We partnered with Robert Friedland's company G2L. They have an own technology. They've been doing this for different types of extraction for many years. And we have an exclusive license with G2 to work with LithiumBank in Alberta. And we've already bench tested our brine with that technology. And that's now moving to Alberta, and it'll be operational in the early part of 2024. So that does a few things for us. One, we didn't have to spend a lot of money. We went with people that have already spent decades working this forward. They become a shareholder of LithiumBank, so we know the dilution, and then we don't have to wait years for that. But I think it's going to let people sort of see where we fit with our peer group. We're certainly more advanced than some people might otherwise recognize. And that is important for analysts and larger types of investors, where they look at where we are, what are those last milestones we need to do to get to a pre-feasibility level as we continue to, on our dance card, who is going to be our final dance partner with our two projects, Boardwalk and Park Place in Alberta.
And when do you think you'll be at that PFS stage?
Well, the important component there is to have this pilot work, and this is going to be 10,000 liters a day. This will be one of the largest pilot plants in North America, perhaps even in the world. So it's not just a small type of pilot plant, it's a very large scale one. And that'll be operational in the early part of 2024. We'll get the results from that pilot work, and that inputs into the initial PEA we did at Boardwalk. So we'll be able to do an augment, or PEA 2, and it'll go right away into the initial PEA that we're going to do at Park Place with Schlumberger. Also, that'll take place in the early part of 2024. We're going to do some more drilling. We're going to increase our resource to measured and indicated with fresh samples that are going to come from the drilling that we do. And with that will come a PFS, and we're aiming to do that by the end of next year, end of 2024. But in the long scheme of what it takes to do a project, the timeline is, I think, we're talking 12, 13 months from now to be at that level and further de-risk and give more confidence to the market where we sit with these projects and what the economics look like.
Timing is obviously important for any project development. Recently, lithium prices have been falling. This year, they've been falling quite fast. What do the fundamentals for lithium look like, and for lithium pricing going forward?
So lithium prices have went from 80,000 to 20. So it has been a precipitous fall. Why is that? Because the demand for lithium has actually been good. And where is most of the lithium, the future lithium, goes into automotive batteries. So let's do a little report card on where we are in the automotive car sales. The numbers are coming in now, we're in November, so we're forecasting that EV sales in the year 2023 will have increased 39%. Most of that growth has come from China. So China is approximately 50% of EV sales. Europe will be about 24%, America 13-14%. More importantly, the growth in car sales and how that's changing, where we're looking at now, it's going to be about 18% of car sales in China are EVs. People look at headlines in the United States and they say the EV industry we're not having take up. But don't look at that. You look at the overall Asia market, which is 60% of the market, Paul, and then you look at the European market, which is bigger than the US market. We're at a point right now where, in absolute numbers, 14 million units were EVs that should be sold this year. The US market, that would be like every single car in the US market would be an EV. So even if the car sales in the United States are falling 2% year over year in perpetuity, and they do not get take up in EVs, that's not what happened. That's not where the demand's going to come from. It's going to come from the Asia markets in Europe, where sales, and as I've already told you, are 39% growth. And as a speculator in lithium, as a speculator in copper, I don't lose any sleep that the US market doesn't have the take up, and the US market is going to, I'm talking manufacturing and sales, will fall 2% a year in perpetuity. How much lithium and how much copper in aggregate did the world's automotive industry use? Well, you don't have to be a mathematician. When you see EV sales climbing by 39%, and when you see EV sales as 18% of overall car sales in China, and growing at that kind of trajectory, the demand for lithium is going to have a positive CAGR growth rate, and a significant one, and it's going to grow from the bottom left to the upper right of your screen. There will be take up. And what I continue to very strongly suggest to people is that all the lithium that's going to be produced by the people that can finally get there will be take up by the world's automotive companies, the battery companies, and the technology companies. I don't lose any sleep about that. And it's really funny how people get fixated on the EV sales at Ford or what have you. That's not the future. The future is the world's largest automotive market, and that's what we'll need to focus.
That begs an interesting question, Gianni, because global automakers don't want to make separate models for different markets, and certainly not with different motor types, really. So have they given any indication that if EV sales in the US, North America, remain sluggish, what that may imply or impact on their portfolios? Would they stop supplying that market?
You got two things happening. One, the US is not the world's largest car market, okay? So it's Asia, Japan, China, Europe, emerging markets. Europe America's 14% of the global market. Okay. China has already told people, they in fact told them years ago, if you don't make X amount percent of cars are hybrid or electric, you just can't sell cars in this country. And it's not an interesting thing or not a polite headline, but the CEOs of all the incumbent automotive manufacturers are all pivoting, irrespective of the little changes that happen in the United States, because that is the largest market. And no matter what, I don't care which government it is, whether we're talking about Brussels or emerging markets or even the United States, we're now selling the 2024 model year. What does the automotive industry look like in the year 2030, Paul? You won't recognize it. And I'm going to strongly submit to you that there's going to be a power of magnitude more EVs available. What's going to stall this eventually is all those other critical metals, because as these companies continue to tweak the chemistry, and that's what people have seen, a little bit less nickel, maybe it's manganese, maybe it's graphite this, graphite that, but the common bonds are going to be lithium and copper. It takes 4x more copper to make an EV than it does the internal combustion engine vehicle. No, I don't care. Is it 3.5 or 4.5? There's going to be a lot more copper used in the automotive industry. And whether they go into solid state or different types of chemistries, lithium is a mainstay. It's a mainstay. And if you're talking about what happens in 2040, I don't care about that, Paul. I'm speculating on what's going to happen in lithium in the next 5 years. One, there's going to be demand growth, and I believe there will be significant demand growth. And two, that as they move the chains forward with that millimetrical progress, as big industry goes towards DLE, direct lithium extraction, that's where you want to be. That's the speculation. That's what we're doing here. If it was easy, you wouldn't have these kind of returns. And that's where people need to focus. And they need to be hyper-focused. And they all have their own teams and their own type of micro-technologies within DLE. All between big oil, between the technology companies, between the Korean companies, the Japanese companies. But I'm there. I'm on the front lines. And they are very interested in DLE. That's the future. That's where the puck's going.
Well, that's all well and good, Gianni, but let's talk about a group of people who, to a certain extent, have shown so far that they're not necessarily interested in DLE or lithium or battery metals for that matter, and that's the general investor. It's always been hard to finance a junior mineral company, and I'm sure today is no different, and particularly today is no different for a company seeking to produce battery metals. Just how difficult is it out there for the juniors looking to bring these new materials to market?
I followed this since the mid-1990s, and you make a lot of observations with every bull market, every bear market, but then you after having some experience, you start to draw some very obvious conclusions. I'll give you one. The euphoria in junior mining, how much euphoria is there in a 10-year period? It's about a year and a half. The rest of the time, there's despondency, there's despair, you're climbing a wall of worry. The second the commodity, the master commodity for that junior mining, whatever they're exploring for, the second that rolls over and continues to fall and a little bit up and down, people are climbing a wall of worry. And the math is, you got a year and a half of euphoria, 8.5 years of what's the opposite of euphoria? Negativity. And then you do get to the lows. And right now we're at one of the things, you look at the overall volume on the TSX Venture, which is the world's largest, I would submit to you, exchange for these kinds of things. John Wayne would have said a long time ago, how low is it? Well, it's lower than a snake's belly in a wagon wheel rut. You're at the bottom. And especially if you look at it from an inflation-adjusted dollar value, you look at the volumes, but that, as Rick Rule would always say, the deeper the bear market, it breeds a bull market. With a caveat, how many companies have been spawned in the last 20 years? How many derelict juniors are there? They don't have a real project. They don't have a project that a bigger company is going to buy. They don't have a project that they're going to be able to finance to go to production. I mean, if there's 1,000 juniors out there, 900 of them unfortunately fall into that category. And people still own the shares of these 900 companies. Something magical has to happen there. Otherwise, so basically we've diluted the companies and the capital, and there's still this big sucking sound coming out of the TSX Venture. But when it comes back in, it gets distributed by a lot more companies, and there are fewer people even following these things that understand junior mining. We missed a whole generation with the people like when you and I were younger. They were distracted with crypto and cannabis, and now they don't understand mining. They don't understand how quickly things can go up, but it just turns. Greed happens very fast, and when it pivots, and how does greed happen? How do you measure it with a junior miner? It was at $2 a share, went to 10 cents, and is now bifurcated 15 to 10 cents for a long time. You wake up one day and it's 40. You feel like you missed it, and rarely do people go in and buy that junior. You have to, unfortunately, go through the misery, because when it turns quickly. It can be led with volume, and it's, of course, always the master commodity has to have an upward price trajectory, and it seems like they all move in unison. No matter how much we can analyze the differences between gold and copper and nickel and all that stuff, they kind of all go up at the same time.
All good stuff. So looking ahead to next year, 2024, what will that hold for the battery metal space, do you think?
It's still interesting to see how gold has, not performed. But when you look at gold in a basket of currencies, it's done okay. So I think, to dovetail onto my last answer, if we need to see gold moving higher, and is it time? I mean, I saw Ronald Stufferle's talk this morning, and it was very compelling. So that would be very interesting for junior shares, because most of them, in fact, are gold juniors. So looking into 2024, we have an election that comes in November, which, we'll see how the direction of that goes. And I heard an interesting comment from this Vivek Ramaswamy, who I find very interesting. I don't vote. I live in Croatia. I have a Croatian and Canadian passport. But he was alluding to the fact that maybe at the last moment, they're gonna say Biden is not going to run, and they'll have to just interject someone of their choice. But this election is going to be, as everyone already knows, a very important one for many, many factors. Maybe everything waits until we get clarity there. I don't know.
Well, there's going to be a lot.
But it's gold, the gold price, and the U.S. election. Those are the two drivers for next year. And but the rest is the rest. And I still think the theme is electrification, and all the things we talked about already.
Great stuff. Well, Gianni, thank you very much for joining us today.
Thank you.
And this is Paul Harris for Kitco Mining at the Precious Metals Summit in Zurich in Switzerland. And if you like what you see, don't forget to subscribe.
Kitco Mining's special coverage of the Precious Metals Summit in Zurich is brought to you by Vizsla Copper.